Hi, good evening all, and thank you so much for joining today's exclusive webinar. My name is Ashish Asthana, and along with me we have Mr. Vinod Sharma, who is our PCG research head and capital market strategy head. Right, he's having experience of more than 30 years. So, and today we are going to talk about the most sensational topic on the budget. So it's a pre-budget time. So, sir, what do you think at this point of time? Is this budget will be vote on account or it will be a interim budget?
Usually, when there is an election coming up, we usually have a concept of a vote on account, in which the government of the day just tells the parliament that this is the expenditure that we would need till the next government is in place,
Right.
and therefore we need only this, and that sanction is taken, and that expenditure is usually done.
Okay.
But there are times when an interim budget is placed. An interim budget would mean that the government takes a shot on the next year as well. If the next government is the same government which is presenting the budget, then those steps are taken forward. Otherwise, you could see a reversal of those things as well.
Right.
So essentially, it's good that it's an interim budget, because the requirement of the day will be addressed.
Right, sir. So how to approach in this budget, sir?
Okay, Ashish, usually we have people going hyper about the budget, and media so much more because they have eyeballs to sell.
Right.
So even if you were to miss the budget day for one day and take a holiday, hell is not going to lose.
Right.
But what impact is that you should listen to the budget speech and refrain from acting on every other, let's say, news that is coming in, and take a cool view of things. And then if you like something, then you press. If you're trading intraday, obviously you ought to have a stop loss in place.
Right.
But apart from this budget, there are numerous other things. The GST. If you are looking for any sector specific things, nothing will come here. Everything comes in GST. And the GST meets at least 12 times a year. You have crude oil, you have currency, you have the central banks, global central banks, our own RBI meeting 8 times a year.
Right.
So those are events which make our markets, shape our markets day in and day out. They are equally important.
Right.
So I think budget should be seen as one of those events and not the sole event.
Right, sir. Thank you. And so in this scenario, as most of our investors have asked this question, what should be their strategy, to trade? If they want to trade, what strategy they should apply?
Okay. Good. Friends, it is important to understand that markets move even before the Prime Minister or even before the Finance Minister stands up and starts presenting his budget. And although the Finance Minister would sit down in the Parliament after giving his speech, mind you, the government policy continues. Even a week after that, you could find something which is coming up, which is impacting the markets.
Right.
So it is not the be all and end all. So it is there.
Mm-hmm.
But if you want to trade, by all means, put a stop loss.
Right.
Okay. And the best way is to look at those stocks which you would have otherwise bought. And if they have come down for a particular reason, then those are the things which you need to buy, and gradually.
Right, sir. So, and what will be this FIIs looking forward in this budget?
I think the FIIs will look forward to the fiscal deficit. Fiscal deficit, if it is 3.3% for the next year, well and good. Although last year the fiscal deficit was 3.3, but we ended up with a actual fiscal deficit of 3.5.
3.5.
So if the government was to gun for 3.3% next year, it will be well accepted. It will not be an issue. And also, if there is some indication which is given where we are going to end this year, that also, if it is less than 3.5, I think it will augur well. But ultimately, a higher fiscal deficit could send alarm bells ringing in the FI community.
Thank you. So next question we are getting from most of our investors, that which sectors will get benefited from this budget?
Okay. See, the budget will address the general direction of where the government wants to go for the next 1 year, at least for the next 4 months or so. So essentially, what we are looking at is that what is the stress that the government gives on infrastructure building, more importantly, there will be some pressure on the government to also give some relief to the common man in terms of tax bracket. Also, whether the farmers which are there, whether there is a rising issue, farm distress has made the ruling party lose Madhya Pradesh and Rajasthan. So maybe there could be addressing of these sectors also. So overall, I think if these sectors are addressed and the fiscal deficit is also kept in place, then there are no issues. But within this space, what can happen? What will sectors that you can look at? I think if the income in the hands of the investors is higher because of lower taxation, then you have the mutual fund industry which will thrive.
Right.
Because the higher earnings means people will be able to save and invest.
Right.
Higher money in hand also means that they could spend more on in their favorite products. So the FMCG could also do well.
Right.
So I would take insurance and mutual fund industries, AMCs, as one sector, two sectors, and the FMCG as three sectors. And because the money will go ultimately, if some scheme comes in which the money will go to the rural economy, farmers or other people, then obviously the banking system per se will also do well.
Right. So 4 sectors.
Yeah.
Okay, great. Now, and what about other sectors? Maybe there would be some negative impact or anything that you would like to talk on other sectors like auto, pharma.
Yeah. See, gone were the days when we used to come out that how will the FM treat the auto sector and all those things.
Right.
I think after the our taxation system has come in with GST, so that has taken more importance. So that part is already done. For instance, there are many things which were used to be in 28%, now they are in 12%.
12%.
And most of the things are now in the 5% bracket.
Right.
So all those actions, you can call them mini budgets, which are happening all the time. Almost once every month, the GST meeting will happen and they'll come in and change something or the other.
Right.
So it is a long drawn out process. But other sectors, I don't think any negative impact would be there. But usually, one of the sectors which was usually punished before the budget was that here is cigarette company, IDC, and the government will tax and therefore it can go down. And it is very strange that if you look at the last 10 years, ITC has gone down 2% before the budget. And if you look at the after the budget 1 month, then the rise is 5%. So that was the time when usually, but now GST things will be very different. It can be different. So it doesn't mean it's a blind buy, but obviously because it is not a part of the budget, so therefore though the tinkering of the taxes is not there, so essentially the particular stock should get a higher PE ratio. That is what I think.
Thank you, sir. Now, most interesting and, a lot of customers are being asking about this. Will there be any change in individual taxation, in the percentage wise or their tax slabs? And also people would like to know, will there be any impact on or any changes on capital gain taxes?
Okay. I think this is an oft repeated demand that bring down the tax slabs or lower the taxation rate.
Right.
I think it can or it cannot happen. It may or may not happen. But chances of, let's say, the budget not coming up to everyone's perspective or let's say, whatever the thinking is, I think the budget will not pass the muster in all the cases.
Right.
So there are bound to be some kind of a people who will not feel good about it.
True.
So do not go into the budget with very high anticipation.
Correct.
If this happens, great. Doesn't happen, nothing. The markets will cry for a day or two, and that's all about it. Right. So for instance, do not be so much perturbed if the income tax slabs are not brought about. But in case they are, they can be a meaningful push to the mutual fund industry.
Right.
For instance, if you just below the par, you reduce some taxation, and you could see almost 50,000 crores flowing into the mutual fund industry in one particular year. So that will be pretty good sum to begin with. So I think this will help the overall industry, but don't go with the assumption that this will happen. As far as coming back to your capital gains tax,
Yes.
I think there is no reason for the government to remove the 1 lakh as an exemption which it gave last time. Last budget was very important because they reimposed capital gains tax. Even
Right.
if you're holding your stock for more than 1 year, you are supposed to be taxed at the rate of 10%.
10%.
Now, because of the fact that we are going into the election mode next year, there could be. I'm not saying that it could happen, but the rivals like Congress, Mr. Chidambaram was the author of that book in which he capital gains exemption, because he originally it was Mr. Jaswant Singh of BJP of NDA who brought it in, that he exempted the first BSE 500 stocks from capital gains exemption. And thereafter, the next budget, Mr. Chidambaram came and he extended that facility to all the listed stocks.
All the stocks.
So if that was to be one of the reasons, I think it could be the current government could preempt that by saying that currently you pay 10% tax on your long-term gains and 15% on your short-term.
On your short term.
So even if you are bought and sold the stock today, you'll be only 15%, and you are holding that stock for 30 years.
Right.
Barring the grandfathering clause which is there,
Right.
you are liable to pay 10%
10%
tax.
tax.
So it is not, it lacks logic. So we could find, if at all the government wants to give in without having said that it was a mistake that we did in last year. So what they could do is that they could bring down the tax slab from 10% to 0. If you're holding on for instead of 1, they can make it 3 years.
3 years. Yeah.
So that will be good.
That will
That will
actually
be good for the government as well as the general public.
general public.
Because then you're saying that you're not really exempting the trading portfolios. 3 years is a good time to hold.
Right. That's right, sir. Which we have it in debt.
Yes.
Look at it. Right. Now, what if lots of populist measures are there and resulting in higher fiscal deficit if that happens?
See, a higher fiscal deficit will only come in if the people are able to see into the budget. Now, no finance minister worth his salt will ever give you a visibly fiscal deficit which is more than 3.3 or more than 3.4. Ultimately, what happens is people will think that these are the kind of expenditures which the government has planned, and where is the revenue going to come from?
Right.
Now, because the finance minister has assumed a tax buoyancy of a higher order, he could say that despite these expenses, because of a higher collection, I'll be able to have a fiscal deficit. Now, that is one thing which is debatable, and which only people will tell ki these assumptions are wrong, and the markets can then sell off in case people think that this fiscal deficit is not achievable. But ultimately, the main point for the markets is that if whatever expenditure that is done, despite a higher fiscal deficit, if it is per se, which I don't think it will be so much visible, but even if it is so, but if it helps the ruling power come back to power again in the elections, that will be a more positive thing for the markets than a higher fiscal deficit itself, standalone. So my own sense is that if the steps that are taken give you an impression, not ultimately what will happen, we don't know. But if that gives us an impression that here is a master card which has been played, which will help the ruling party, I think the markets will take into stride the visibly larger fiscal deficit.
Right. Thank you so much, sir.
My pleasure.
So now, if we have to just sum it up. So what will be your final take to all our viewers that you would like to, just give a final take on that?
Okay. Friends, do not be too bothered. Do not feel tense. Just relax. Listen to the speech. Listen to other people, and if you feel like, do trade. But in case the market stumbles or go here and there, I think you ought to look at your favorite stocks. What are the stocks that we can suggest, Ashish? Look at Reliance. If it falls, a good stock to buy. Look at ICICI Bank. Look at Axis Bank. These are the banks who are going to do well in the coming quarters.
Right.
Further, and within the FMG space, look at ITC. So this is some of the stocks that we have told you. I think you should be willing to nibble at should they fall.
Right. Thank you so much, sir. So, viewers, I am sure that this session was quite helpful for you all. If you feel that this session was helpful for you, you have an option of raising hand. You can raise hand and I can quickly check this out from here, right? So great participation I can see out here. Mr. Ajit Maurya, Mr. Puneet, Mr. Gurpreet Singh, Mr. Mandeep Singh, Mr. Prabhakar Mali, Ms. Pradnya, and now the speed have increased. You can see Mr. Karam, Mr. Mandeep, Mr. Pramod, Ms. Punita, Mr. Ramesh Khemani, Mr. Ranjit Mishra, Mr. Samir Patole, and Mr. Sanjeet Rai, and the speed have been increased in a very high speed. I could not even name them. I could not even check this out. So thank you so much for your participation, and thank you so much, sir, for such an insightful knowledge to all our viewers. And I wish you all have a great evening ahead. And one more thing I want to highlight here, that I was getting to a couple of questions. I've missed the earlier part. So the earlier, if you have missed out, the recording would be available on the same link after a couple of hours. You can check it if you're using from mobile. When you get a pop-up or when you click on the link, select the mobile browser. Do not select the app. App is for only viewing the live webinar so that you can ask the questions. Else you can select the mobile browser and you can view the recording. Plus, after budget, we also have post budget webinar, which is scheduled on 1st. So this time the budget is there on 1st. So we have scheduled it at 4:30 on 1st of February. So the link is available on our website. Kindly register yourself so that we can continue our discussion from here post the budget once the speeches and the entire details have been disclosed. Right. So thank you so much and have a wonderful day.
ठीक है, 15 मिनट